Okay, well, I guess this is working. All right, folks, so we are 14 minutes away from the Open of London. And once again, this is Mark here for our London session. Now, let me start by taking a quick look at the calendar because honestly, I haven't really looked at the calendar yet. So, what do we have in store for us today? Okay, looks like not much from the US, and not much as well from Europe. So I would say let's expect the market to remain technical. Let's stick to the charts. Don't look for big breakouts without a catalyst available. All right, so having said that, let's take a look at the charts. And what do we see? Okay, interesting in your euro. You seem to have a lower high situation there. We've had a shooting star from Monday. So it looks like we will be looking at further declines today in euro. We'll confirm that later. Dollar yen after yesterday's big leap. By the way, what happened yesterday? Why did this dollar yen shoot up? We basically had inflation numbers in Japan coming out strongly. Now, why was that a concern? Remember that the Japanese economy has been on a deflation for some time. Although it is curious that the market's response was a spike up in dollar yen, since inflation typically would have been seen as something that would lead to your currency actually strengthening. So that is worth examining further. Aussie gave us a very nice shooting star, even better than Euro shooting star Monday, and Tuesday we have the sell-off. So now the question is, can we get some follow-through? Remember that by this time, Australian markets are about to close. So big question mark if we can get further action, but it looks interesting in terms of playing that consolidation that we've had for the past month. And of course, gold. Again, you look at the charts and you get to sense that there is this general strong dollar theme to be had from late Monday to yesterday, and then following on to today. All right, so let's start by taking a look at the specifics for our euro. Here we are in euro, guys. Let me clean up the chart a bit. So many lines. So where do we find ourselves in euro? Like we said, we had a shooting star, and this is the right account. Okay, we had a shooting star and we had a sell-off from yesterday. We are approaching moving averages. All right, so something to take note of. Working rate right now for euro is at 1307. That moving average, that 21-day EMA, is at 1275. So we have some room. We're talking about maybe getting 30 pips before we start testing the moving average. And you know, if you look at your chart, it's not exactly, shall we say, the moving average is not exactly a wall. Okay, it is a support, but it is repeatedly, or it could be repeatedly violated. Okay, so there's a tendency to violate that moving average. Case in point, what happened here back in February. All right, now what else do I need to know? average range is at 92 pips. So the ranges have tightened quite a bit for the last 3 weeks. But high for the day is at 1345, low is at 1295. So there is room to maneuver. The question is, do you have the signal to take any immediate action? Okay, now we go hourlies, and what do we have? There's your moving average line. You have a pattern of lower highs and lower lows. Right now we seem to be at a lower low, so not exactly a good idea for you to jump short when you're at a lower low. So what are we saying here? Can we get shooting stars, or I forgot what to call this, a dark cloud cover here from the moving average line later on? Other options, well, as we said, average daily range is about 92 pips. High for the day is 45, lowest 90 is around 129, so 134, 129. So markets have had 50 pip range. So you could have another 40 pips if a bearish breakout happens. So selling at the break of this is also an idea, but we want to see a close below the low, below 1295 on an hourly level before we immediately jump short. Okay, so yeah, we'd love to sell this chart, either coming from your moving average line, seems to have been doing a good job of it, or give us a close below this low for the day, and that would be our entry targets. Now, with our average range at 92 pips, highs at 1345, we could be talking about 1252. If we're just talking math, of course, targets should always be based on what the charts are telling you. Now, as we said earlier, your daily exponential moving average is at, actually forgot, so let me take a look. Your daily exponential moving average is at 1275, so that would be our objective, try to get to 1275, break of 1395. So you're talking about maybe a 20 pip price, a 20 pip target. If you look at the charts though, what do you see? You previously had a hammer right around here, so that makes for a good support level around your 1260s area. Okay folks, so basically what I'm saying is, yes, we are bearish in euro still. We are in a consolidation in the hourly charts. We need a close below that in order to sell. Your eventual price target should be something like 1252 for you to just hit your average daily ranges. You have a support around just about 1255, 1260 level. So it's a question of do you have, or when will you get your hourly close below the day's low, below 1295, before you jump in. Of course, if you do find yourself near the exponential moving average, then you can use that proximity to the exponential moving average as an excuse to sell, preferably with a candle like this. Let's zoom into that. Okay, so preferably I'd love to see this kind of candle coming from that moving average line to tell me that, hey, it's time for you to sell already. Other candles that could have me selling would be, well, it's always nice to have a long wick that reaches out to the moving average line, because it tells you that there was an attempt to change the sentiment in the market, but it got rejected from the moving average line. So yeah, for now, nothing immediate, folks, but we are bearish. We are looking for something to happen here. Alrighty. Now, earlier we said that we'd want to take a look at our dollar yen. Why did you want to take a look at dollar yen again? Let me go dailies here. So, given that general bullish sentiment from the last few days for the dollar, we find dollar yen testing its moving average line. Is it a good, strong moving average line? That's a big question mark for me, because if I look at my chart, there were instances where, we just whipsawed around that moving average line. Clearly, though, there's no momentum in the market right now. Okay, so the dailies are showing me indecision. At least the daily candle is showing indecision, just as that chart hit its moving average line. But let me ask another question. Where are we with respect to Fibonacci retracements of your downswing? And that puts us at around 38.2 Fib retracement. Not the best Fibonacci level to be joining a trend, to be jumping in. Normally, you'd like to see a pullback all the way to 61.8 Fib before you join the sell side. Okay, that's the ideal situation. However, I would recognize the fact that we have moving average, we have 38.2 Fib retracement. So if in the lower time frames there are signs that says the resistances are working, then I might consider going short in dollar yen. So let's see what the lower time frames has for us. Hourly charts. All right. Ugly would be the word, I think. Why do I say ugly? Because these are nice bearish, nice long wick here, another nice long wick, but an inability to get out of that consolidation. Do I want to buy this? Given that my resistances are in the daily scale, I am not a buyer of dollar yen at this point. Do I want to sell it? Yes, we are at a nice resistance area. Ideally, give me a push below this consolidation low, take out the moving average line, and yeah, I'll be a seller of dollar yen at that point. What would be your target? Well, immediate support for you would be here. By the way, the breakout point is around 44.20. Okay. Immediate support for you is at 43.85. Let me draw fibs on the week's rally. Well, the nice target, or the 61.8 fib, is all the way here at 143.12. So we can sell this at the break of that consolidation floor. Take out the moving average line as well. give us a close below that on an hourly scale. Target for us initially right about this low here at 43.85, and potentially we could be talking 43.12, 143.12. Can you sell right now? Okay, so this is really the problem with impatient people. At this point, I'm not going to sell this. Okay, you're inside a consolidation. Let richer traders play with the market inside that consolidation. You don't want to be jumping in, especially right in the middle of a consolidation. Yes, we like the resistances. We think it's strong. But as a retail trader, you're not a bank. Okay, you cannot afford, you cannot afford floating losses. You cannot afford, especially when you're trading at margin. So allow for momentum to build, and momentum will likely build once you have a close below the moving average line, below the consolidation low. So nothing immediate. Actually, I don't have a trade for the day yet. We do have the open of London, so let me take a quick look at the euro. You know me, I'm the euro guy. I like euro. See if there's something that I can do there. Okay, so nothing really. We're in the middle of things. No bearish breakout, far from your exponential moving average. All right, let's move on. Let's take a look at the Aussie. Oh, okay, so a completely ugly chart. Maybe if you go really intraday, you can generate something out of this. But okay, technically, what do you have? You've got this consolidation. You actually have this hammer here, a shooting star, from the previous from about 2 hours back. This exponential moving average, given how it was repeatedly crisscrossed Monday, I don't think that it will hold water. I think the play here is this range from about 6350 to 6500. That's actually decent. Oh, sorry. I am looking at the daily charts, not the hourlies. Sorry guys. That's why I was thinking, how could it be that wide? All right, so these are the daily charts. It looks ugly in the daily charts. Okay. This is something that professionals do. Professionals actually like to trade this thing. Because pros rely on the idea that markets typically will just consolidate, and you were coming from the resistances. My only problem with shorting this now is that you're in the middle of that consolidation in the daily charts. Perhaps if you get a close below the moving average line, then a daily close below it could have you thinking about easing towards your consolidation lows for the month. But outside of that, this is not the best time to do anything in Aussie, especially when you think about it. The Australian markets practically closed at this point, at this time of the day. Okay, Sydney should be closed by now. So yeah, this is not something that we'd like to be into. So let me just skim through the different charts. All right. I'm looking at gold. So let me go dailies. What did we say about gold before? That we have this bearish channel seemingly happening here. We were looking for rejections from the channel resistance line, and we've had that from Monday, Tuesday. Very little price action so far for the day. Once again, just around your moving average in the daily charts. So I think you've got lower highs and you're developing lower lows here. But once again, you're not in a position to do anything. You need a close below the moving average line in order to take action. All right, so whew, this is a tough market today. Maybe, is there anything that can be done intraday? Let me go hourlies. Well, let's see. Cup and handle pattern. Cup and handle pattern is normally considered to be a bullish reversal, but that's just the hourly charts. Okay, where's your cup and handle? This is a cup and handle. This is the cup, that's the handle of your cup. Technically, this, you're actually in the process of breaking higher, pushing towards your resistance line. But let's drag some fibs, see how this looks like. Here's your downswing. Okay, so working rate is at 33.10. You could be talking about trying to get all the way up here. 61.8 retracement, 33.24. What do we know again? In the dailies, we have a pattern of lower highs. We are in a bearish channel. So I think the more prudent course of action would be to see if you can get rejected from 33.24. Buying this right now wouldn't be such a hot idea, even if you do have a bullish close for the R. Given your previous long wick here, you might run, you buy this, you run into trouble once you hit 33.17. So again, safer course of action, look for resistances, play with the bearish channel that's developing in your daily charts. Let me take a look at our MetaTrader platform. This just looks like a very ugly market right now. Oil is very mixed. US equities have been bullish, but that's bullish the past 2 days, still inside your consolidation for the last 2 weeks. Okay, I just don't see anything that we can trade immediately. Let me take another look at that euro. One of these days I'm going to make an EA or a C-bot that would allow me to just place a price level, and then I think, yeah, that would be a nice project. we want a C bot that will look for these kinds of candles, because oftentimes, we don't have time to spend the whole day in front of our screens. We know that there are prices that we want to check, we want to take a look at, uh, but you don't want to just put a buy limit or a sell limit in this case. So what am I saying? I'm saying that once again, give us your moving average line, and then give us a signal there. Give us a shooting star on an hourly level. Okay, a shooting star here, or if not a shooting star, a gravestone doji. Right as we hit that moving average line, and we will be sellers at that point. Again, for bearish breakouts, well, it's not happening right now. We are just playing that consolidation, so I wouldn't be too excited with a bearish breakout at this point. All right, guys, so no trades for me. I'm just not a buyer of euro at this point. I tend to think that your pattern of lower highs, lower lows in the hourly scale is going to hold. Remember, we do not have a catalyst, and if you don't have a catalyst, it's difficult to expect market structure to change absent a catalyst. All right, so well, I guess we have to end things early, folks. I mean, there's nothing that I could do at this point. Well, let's monitor GBP, guys, and our euro. See if they do get to the EMA line, and if we get the necessary candles, that would tell us to short euro or GBP already. Buying this is not a good idea for us, given that you have your lower highs, lower lows in the hourly charts. You have your moving average line as an immediate resistance level. And there's no catalyst. So folks, it's going to be a wait and see game. Like I said, I guess I'll have to cut things short at this point. I just wish I had that EA already. I had the EA or the C-bot that I have in my mind that would allow me to put that sell once the bearish candle pattern happens from this moving average area. All right, guys, I guess that's it. Hope to see you on Friday. By the way, we're doing well with the copy trading account. I'll have our trader there make an update to show you things, how it's working, and to brief you on how you'll be able to follow that account. All right, guys, thank you for joining.